Beta Limited is an Australian resident retailer that is registered for GST. It purchases board games from an Australian distributor, Alpha Limited. It then sells the board games to retail customers in Australia. Beta has made creditable acquisitions from Alpha and is entitled to an input tax credit for the GST paid. Beta has also made taxable supplies to customers and has a GST liability for the GST collected. The net GST amount will subsequently be remitted to the ATO. The Goods and Services Tax is a broad-based, indirect consumption tax that targets the end domestic consumer. It is charged as a flat rate of tax on the value of goods, services and certain other supplies made in Australia. Entities in the supply chain make purchases from suppliers and pay GST to those suppliers. Those same entities make sales to customers and collect GST from those customers. The net amount of GST is remitted by the enterprise to the ATO as part of the BAS submission. In this way, the GST is effectively only payable on the value added at each stage in the supply chain. There are three types of supply in the Australian GST system: taxable supplies, GST-free supplies, and input tax supplies. However, a GST liability only arises when a taxable supply is made, meaning that GST-free supplies and input tax supplies are not liable for GST. Taxable supplies include things like the sale of manufactured goods, the provision of consulting services, and the supply of real commercial property. For taxable supplies, a GST liability arises when a supply is made for consideration, such as the sale of goods for cash payment. The supply is made in the course or furtherance of an enterprise, which is broader than just operating a business, but excludes activities as an employee as well as hobbies. The supply is connected to the indirect tax zone, referring mainly to delivery or availability in Australia. And the supplier is registered or required to be registered for GST, where the supplier carries on an enterprise and meets the GST registration turnover threshold. However, there is an override where certain supplies are deemed to be GST-free or input taxed and are therefore not taxable supplies. GST-free supplies include things like the sale of fresh food, exports of goods, and the supply of a going concern enterprise. For GST-free supplies, no GST liability arises on the supply, but a registered supplier may be entitled to an input tax credit on acquisitions used to make the supply. Input tax supplies include financial supplies, such as the provision of loans, leases of residential properties, and supplies of residential premises. For input tax supplies, no GST liability arises on the supply, and the registered supplier is also not entitled to an input tax credit on acquisitions used to make the supply. Businesses that are not registered or required to be registered for GST effectively make input tax supplies, as they are not liable to charge GST and are not entitled to input tax credits for acquisitions. Where a GST liability arises for an enterprise making a taxable supply, an entity is entitled to an input tax credit for a creditable acquisition. Creditable acquisitions arise on the acquisition of taxable supplies for consideration, that are at least partly for carrying on an enterprise, and where the acquiring entity is registered or required to be registered. The input tax credit will generally be based on the price paid for the acquisition and is generally only available once a valid tax invoice has been received. It is these input tax credits that offset the GST liability, enabling the net amount to be calculated for remission to the ATO. In addition to taxable supplies, a GST liability also arises in respect to taxable importations. In this case, for administrative expediency, the GST liability generally falls on the importer rather than the non-resident supplier. However, where the importer is registered for GST, they may be entitled to an input tax credit to offset the GST paid, so-called creditable importations. It should also be noted that apportionment of GST liability or input tax credit may need to be made where there are mixed supplies or composite supplies, or where the acquisition is only partially for a creditable purpose. To recap, the GST is a broad-based indirect consumption tax that applies a flat rate of tax to the value of taxable supplies. Input tax credits are available for creditable acquisitions, meaning that only the net amount of GST collected is remitted to the ATO.